Hello, my name is Paul Jones and I'm the Fund Manager of the Boston Private Income Fund. The Boston Private Income Fund, or BPIF, can report and confirm that the quarterly return to BPIF investors for the June 2020 quarter is 1.52%, equivalent to an annualised return of 6.08%. Your investment committee is pleased to report that there has been no disruption to the operations and activities of the BPIF linked to or caused by the current COVID-19 pandemic. Our June 2020 quarterly return is again in line with previous quarters, and in this period of historically low interest rates has again comfortably outperformed our targeted benchmark return. Whilst the Reserve Bank of Australia, or RBA, opted to maintain the official targeted cash rate at 0.25% over the June 2020 quarter, the market-based 30-day bank bill swap rate, commonly referred to as BBSW 30, was volatile over this same quarter. Traditionally, BBSW 30 has floated slightly above the RBA official cash rate, as per the graphic that we have currently shown on the screen. Whilst the March 2020 BBSW rate of 0.35% sat alongside the official cash rate of 0.25, the BBSW rate as at the conclusion of the June 2020 quarter was quoted at 0.9% or 9 basis points against a maintained official cash rate of 0.25%. It is important to note that the BPIF's margin over BBSW 30 has been maintained over this period as in previous quarters. Regardless of significant market movements, Boston will meet distribution payments for the June 2020 quarter in full and as expected prior to the program payment date of 21 July 2020. Investors will be aware that there has been a wide range of commentary and prediction about medium and long-term economic impact of COVID-19 pandemic and its influence on financial and other markets. Indications from market economists, in combination with movements observed in the interest rate futures markets, suggest a possibility of another rate cut to the official cash rate down to zero at some time over the next 12 months. Interest rate futures pricing suggests a 50% chance of that occurring. By contrast, RBA commentary suggests that a move to zero cash rate will be resisted. That divergence of views reflects the uncertainty that we are all feeling during this period. BPIF has demonstrated stability of operation and return during this period, and all indications are that the stability will continue. The stability and uncertainty of returns provided to investors of the BPIF during times such as this should be a comfort to investors generally. Our confidence in that stability is reinforced by the actions of both the state and federal governments and the actions of Thinktank, the mortgage platform in which BPIF invests. There have been several indicated significant interventions by the federal government which have served to support Australia's economic position, most of which have been well publicised and well known. Not so widely publicised are the activities of the federal government through the Australian Office of Financial Management, or AOFM, which has moved swiftly and decisively to ensure liquidity in credit markets in a variety of ways. Thinktank has been at the forefront of gaining access to the liquidity support programs being instituted by AOFM, which, for our purposes, are calibrated to ensure continued lending and cash flow to lenders in an environment in which many borrowers are experiencing business disruptions which are not of their own making. The activities of the AOFM are serving to insulate those borrowers in hardship by strategic investments into lending platforms. The BMIL Investment Committee can confirm that it has assisted the AOFM in its introduction to Thinktank as a note holder of various classes in one of the existing Thinktank warehouses and via the secondary market as a note holder in two of the Thinktank securitisation trusts. This reinforces our view that BPIF returns will be maintained into the future, unlike many equity investments where dividend payments have been deferred, reduced or abandoned over the recent months. It is worth noting that the advertised rates for term deposits with Australian banks and non-bank financial institutions fell again during the June 2020 quarter. The market average for one-year term deposits is now 1.1%. The BPIF remains committed to participating in the credit-approved warehouses and securitised trusts created, introduced and managed by Thinktank Group Proprietary Limited. BPIF can confirm that as at 30 June 2020, Thinktank holds $1.64 billion in loans under management across 2,654 loan accounts. The weighted average loan-to-value ratio, or LVR, for the Thinktank loan portfolio is 64.1%. Loan arrears of greater than 30 days, as at 30 June 2020, total 11 loans, or 0.41% of the total loan accounts under management. This data and the developing COVID hardship category forms the cornerstone of the current BMIL Investment Committee consideration. The newly introduced hardship category of loans is being well managed and proactively managed by Thinktank. Payment holidays and deferrals extended along with the rest of the industry are below those reported by its peers, and the rate of curing of those loans is far faster than was originally anticipated. The BMIL Investment Committee continues to receive constant and reliable communication from the Thinktank Executive Group and credit team, as we both continue to successfully navigate through the new pandemic-influenced market environment. This is considered a welcome and supportive arrangement by BMIL Investment Committee. Please note that BPIF remains open to new investors, and anyone looking to increase their current investment balance or create a new unit holding should contact BMIL to discuss. Our company CEO, Darren Harrison, will be in contact with investors via phone in the last half of this month and will be available to discuss. The Australian funds management industry, along with other participants in the wider Australian economy, continue to navigate through the changes that have been created by the COVID-19 pandemic. As stated in the March 2020 quarterly report, few could have predicted the rapid events that have occurred across global markets and communities in the past months, nor the duration over which many COVID-19 created concerns have persisted. All unit holders will receive the full 91 days of interest income for the June 2020 quarter, which will be duly distributed or allocated ahead of the date of 21 July 2020 in accordance with your respective distribution instructions. Our commitment to maintaining regular income payments without any volatility in unit value remains a cornerstone of the BMIL model. Whilst the impacts of COVID-19 are wide-ranging and evolving at this time, the BMIL Investment Committee has full confidence that our strategically selected investments, specifically that of Thinktank, will continue to provide regular and reliable income to unit holders during a time where volatility in other markets is causing and looks continue to cause anxiety among investors generally. BMIL still remains business as usual in this uncertain time. If you have any questions about this video report or your current Boston Private Income investment, please call me on 02 8920 8886. Thank you for watching another of our quarterly video presentations.